Namaste, my dear friends. Now referring to you, CMA final examination, December 2024, question paper, Indirect Tax Laws and Practice, paper number 9. I am presenting here solutions for the given question paper. One by one is as follows. As you are aware of that, section A, compulsory question, which is MCQs, one by one I am referring here. Point number 1 I am referring here. Which of the following persons can opt for composition scheme under subsection 1 and subsection 2 of section 10 of the CGST Act? In the state of Delhi, when you talk, the following points are given 1, 2, 3, 4, 5 and 6. Point number 1, a registered person whose aggregate turnover in the preceding financial year did not exceed 75 lakhs. Point number 2, a registered person whose aggregate turnover in the preceding financial year did not exceed rupees 1.5 crore. Point number 3, a person engaged in the manufacture of pan masala, tobacco and manufactured tobacco substitutes. Point number 4, a person engaged in the manufacture of ice cream, other edible ice cream, whether or not containing coca. Fifth point, a person engaged exclusively in the providing restaurant services. Point number 6, a person engaged exclusively in supply of medicine. So the appropriate answers we will talk about here, point number 2, point number 5, point number 6. Point number 2, point number 5, point number 6. But when you refer the combination of the answers A, B, C, D, here 1 is mentioned in A, B, but when you look point number B, appropriate 2, 5, 6 is matching here, but along with 1 is cannot be considered because when you talk about Delhi, 75 lakhs turnover not applicable. 1 crore 50 lakhs turnover is there. Up to that, eligible for composition scheme. Unfortunate, the question has been set in such a manner that 1, 2, 5, 6 is most appropriate answer to be considered among the given answers. Therefore, I am presenting here the given answer for the given question is question number B. Question number 2, reading as follows. Mrs. P Associates of Chennai received certain consultancy services from Delhi Incorporation of USA. Both are not related persons. The services received without any consideration. Does the same classify as a supply? The straightaway answer, no, it is not a supply. When we talk about import of services, section 7, section 2, class B, there must be consideration. If no consideration, it should be at least covered under the schedule 1. Schedule 1 transaction talks about import of services from any person or from an establishment outside India. From any person means related person. That means say that schedule 1 point number 4 says import of services by a person from related person or from an establishment outside India. In the course of furtherance of business, even without consideration is supply. But in the given question, they said very clearly they are non-related persons, therefore not covering schedule 1. Also be not covering supply includes section 7, subsection 1, class B. Therefore, it is not a supply. Here right answer, straight away I can say answer B. No, since party to the contract are not related person, therefore the right answer in the given case is question answer number in the given question is point number B is the right answer. Further, question number here, serial order, MCQs, point number 3, reading as follows. Sanjay Kumar, a resident of Noida and unregistered person, Uttar Pradesh, working in private firm, went to Himachal Pradesh for family vacation via Delhi, Chandigarh, Himachal Pradesh in his own car After entering Chandigarh, his car broke down due to some technical issue. He called on roads an emergency roadside car assistance company registered under the GST in Delhi to repair the car. The car was repaired by the staff of On Roads. On Roads does not have policy to maintain a record of the address of the person taking the car assistance services. The value of supply amounted to rupees 50,000, being labor charges 40,000 and spares rupees 10,000. The bill was supplied to be generated. The bill was supposed to be generated online through the server, but due to some technical issue, it was not so generated. Determine the place of supply in the given case. Simple, my dear. As you are aware of that, we have section 12, subsection 2 of IGST Act. A default provision where if the recipient registered person, recipient address is the recipient location is the place supply. If the recipient registered person, the address of the recipient available with the supplier is the place of supply. In the given case, they very clearly said they are not having any habit of maintaining address of the recipient. Very good. And the invoice also not issued because technical issue. Therefore, in the hands of the on-road service provider, they are not having address of the recipient unregistered person. In that case, the section 12 subsection 2 of IGST Act says that place of supply goes to location of supplier where the on-road service registered person in Delhi. Therefore, place of supply is Delhi. If the point number A appropriate correct answer, further B, C, D not required to read. Therefore, right answer in the given case is A. Further reading as follows. Point number 4. ABC Limited has provided following information for the month of March 2024. Intrastate outward supply 9 lakh. Interstate exempt outward supply 5 lakhs. Turnover of exported goods 10 lakhs. Payment made to GTA 80,000. ITC not availed by GTA. Calculate the aggregate turnover of ABC Limited. Very simple. It is turnover of ABC Limited. How much the turnover here they mentioned? They mentioned 9 lakhs. Here they mentioned outward supply. Though even exempted, their turnover. Therefore, 5 lakh. Thereafter, export turnover, interstate turnover. How much? 10 lakh. But this rupees 80,000 is inward supply from a GTA where the recipient paying the tax, which is not his turnover. ABC Limited turnover only 9 lakhs plus 5 lakhs, 10 lakhs. This rupees 80,000 they received. ABC Limited received the services and paying the GST and RCM does not mean that it is the turnover. Therefore, the total aggregate turnover here is almost all 24 lakh rupees. Where is matching? Point number C. The right answer in the given case is point number C. Got the clarity, my dear friends? Further, point number 5. Which of the following services are not exempt from GST? Very good. Yoga camp conducted by charitable trust registered in section 12AB of the Income Tax Act 1961. It is exempted. But question asking what? Not exempted. So we have to identify correctly. So it is exempted. It is exempted. Point number B. Services provided by business correspondent with respect to saving bank account in rural area bank, which is exempted. But they are asking what? Non-exempted supply. Point number C. Services provided by cord blood bank for preservation of stem cell, which is exempt withdrawn. Therefore, taxable. Service provided by commentator to a recognized sports body. See, this is also be taxable. Only being a player, being an individual as a player, umpire, coach, team manager, referee. If they provide these services to recognized sports body, exempted. Commentator provide these services to recreational sports body taxable. But in the given case, they're asking which of the following services are not exempt from GST. You have to say answer is C and D. Like that you have to say the answer. Further, my dear friends, question number 6. Calculate the tax to be paid by Mr. C, a composition dealer who supplied laptops being a trader from the following data. Cost of purchase 3 lakhs plus GST 12%. Profit margin 10% on cost of purchase. So they're asking to find out the answer, namely GST payable. See, composition taxpayer being a dealer liable to pay CGST 0.5%, SGST 0.5%. Now here we have to find out first cost. So purchase rupees 3 lakhs on which GST 12%, on 3 lakh 12% GST 36,000. Therefore 3 lakh 36,000 is a cost because it is not under ITC, no ITC. Therefore form part of the cost. If so, add to that 40% margin on the cost, 40% margin on cost, namely on 3 lakh 36,000 at the rate of 40%, which comes here 3 lakh 36,000. New calculator, not working, not functioning. New calculator. So in the examination hall also, my dear, you please take 2 calculators, not 1. That is always good. Safety side. Got the clarity? I have the standby one more calculator. Yes. I will take up right now. See, I have one more calculator. Always I keep 2 calculators with me. Now presenting here. What is my cost, my dear? 3 lakh 36,000. On which 40%, which is 1 lakh 34,400. Now total comes here 4 lakh 70,400. Now they liable to pay CGST. What percentage? 0.5 percentage. 0.5 percentage SGST. Now effectively you can speak totally 1%. In that case 4,704. 1% on this value. Effectively speak. But when you present, it should be CGST SGST amount. Together 1%. So 4,704. Where is matching here? Point number A answer. So the right answer in the given case here is point number A. Further referring, question number 7. The time limit beyond which, if the goods are not returned, the capital goods sent for job worker shall be treated as supply is 5 years, 1 year, 6 months, 3 years. Is only 3 years. For input goods, 1 year. So the right answer here is 3 years. Answer D. Further, my dear friends, question number 8. Exemption can be claimed at dash stage even if not claimed at dash stage. It is one of the questions drawn from study material. So if you are not claim the exemption at investigation stage, you can claim at a adjudication stage. So here adjudication stage, if not claimed at investigation stage. Therefore, the right answer in the given case is answer is A. Exemption is not claimed. At the time of adjudication, you can claim. If not claimed at the time of investigation. Investigation taking place, you got tense and not able to find out what is exempted, what is taxable. In that case, at the time of adjudication, namely finalization of the amount, that time when the issue show is you can reply, sir, please consider this exemption which is omitted, sir, please now consider, sir. At the time of investigation, we not considered, sir, please. Then the department will consider if it is relevant to consider to claim exemption. So exemption can be claimed at adjudication stage, even if not claimed at investigation stage. So right answer is A. Further, my dear friends, question number 9. Mr. DD, a supplier of goods, pays the GST under regular scheme. The amount of input tax credit available and output tax liability in the different tax heads for the tax period are as under. Head CGST, SGST or UTGST, IGST. Output tax liability is given, ITC amount is given. Compute the minimum net GST payable in cash by DD and also closing balance of ITC of each head. Very simple, sir. They themselves said here output tax liability here is 60,500. I will say here in a simplified manner, otherwise I will put like this. I will take a little bit space required for the computation purpose. So I will put here. Here I will say IGST, CGST, then SGST. Output tax they given, output tax commonly given for all the cases 60,500. So IGST 60,500, SGST 60,500, CGST or UTGST 60,500. From that, from output tax, deduct ITC of IGST first. First ITC of IGST as per section 49 capital A. How much here is there? 75,000. So 75,000 if you deduct here. So now here what you got? 60,500 minus 75,000. You got still excess. How much here you got? 14,500 excess credit. This can be set off to CGST SGST liability before taking the credit of CGST SGST. If so, to which account I have to set off this IGST? CGST or SGST? Which priority? When they said minimum net tax payable, then I should choose to set off the excess IGST against that CGST or SGST where the credit is lesser. SGST credit here is far less. Therefore, I am claiming the entire amount for SGST 14,500. With that, entire input tax credit of IGST fully utilized. Then claim ITC of CGST against CGST payment. How much CGST credit? 68,000. So 68,000. Here how much is there? SGST credit 49. This one 49,000. So claim here 49,000. Then you have here IGST is nil, CGST is 16,500 minus 68,000, which gives excess 7,500 excess. Thereafter here 60,500 SGST minus IGST 14,500 minus SGST credit 49,000. So still you have here excess credit of 3,000. So excess credit we have IGST nil, CGST excess closing balance 7,500 can be carried forward next month or next quarter. SGST 3,000 rupees excess credit is there. So nothing is payable. Is the correct values. But unfortunate, in the given question, here it is matching point number A. IGST nil, very good. CGST credit balance is 7,500. But they said here, payable SGST rupees 3,000. It is not payable SGST. it is excess credit of HGST to be carried forward. Therefore, I have no other option. I'm answering here answer A. Something you have to answer now, because A, B, C, nothing is correct answer. A says payable SGST, but I got excess credit of SGST. So the right answer here is IGST nil. Excess credit of CGST is 7,500 closing balance can be carried forward. Next period, SGST excess credit 3,000 rupees is there as a closing balance to carry forward. Nothing is liable to pay through return cash ledger. But I have to answer no for the given question. So appropriately I am choosing the right answer is A. Further, point number 10. What is the time limit to file intimation for withdrawal from the composition scheme if the person who availing composition scheme under the GST laws during the financial year 2023-24 cross the turnover limit of 150 lakhs? As you are aware of that, intimate to department within 7 days from the date of event occurred by way of form GST CMP 04, withdrawal of the composition scheme. The right answer here is answer the point number D, within 7 days from the date of crossing the limit. So the right answer here is D. Therefore, it's confusing. Within 7 days from the end of the month in which the limit crossed. Sorry, with immediate effect, you have to switch over to normal scheme and inform from the date of event occurred within 7 days to department by filing the GST CMP 04. Is it clear, my dear friends? Further, question number 11. Sorry to say, question number 10, 11. Determine price to be taken for computing deductive value in rule number 7. Sale quantity 80 unit at the rate of 90 rupees, 50 units at the rate of 95 rupees, 25 units at the rate of 105 rupees, 40 units at the rate of 2,100 rupees. They have given. So here the highest quantity at what price? Highest quantity is the base. Highest quantity here is 80 units. What is the price? 90. So where the rent is matching here? D. So the right answer is in the given deductive value method, the right price here is 90 rupees per unit. Point number D. Point number D is the right answer. Further, question number 12. Computed value does not consist of A. Cost of material and fabrication or other processing employed in producing the imported goods. B. Reasonable profit of foreign exporter. C. Cost of or value of all other expenditure as per rule number 10.2. This is not addable. What is not addable? Point number D. Reasonable profit of Indian importer, nothing to do. Therefore, it is not addable. Why they are asking? Does not consist. So point number D. Reasonable profit of the Indian importer should not form part of the value of imported goods. Therefore, the right answer here is answer D. Further, my dear sir, question number 13. The current limit of 1 lakh per annum for duty-free import of sample in terms of notes number 154/94 customs dated so and so is enhanced to 3 lakhs. Enhanced to 3 lakhs per annum, not per month, per annum. So where the matching it is? Point number B. So right answer here is point number B. Question number 15. Sorry to say 14. Question number 14. Maximum duty drawback rate at the rate of dash on FOB value. 1/3, namely 33%. Here answer is D. Right answer here is D. 33%. Question number 15. Full form of IIN is import of goods at concessional rate. I stands for import of goods conditional rate. Again, I stands for identification. N stands for number. So the right answer is B. The right answer here is B. Further referring to you, the section B, namely descriptive nature questions. Question number 2. Point number A in that sub point 1, sub point 2. Now reading. State with reason whether the following supplies are mixed or composite. 1. When goods are packed and transferred with insurance. Packing and insurance goes hand in hand in the ordinary course of business for transportation of goods. Therefore, it is a composite supply. The principal supply here is supply of goods. Point number 2. Mr. Neeraj booked a Rajdhani train ticket which includes meals. Sorry. Here, transportation of passenger purpose providing the meals in their ordinary course of business. Therefore, Neeraj booked Rajdhani train ticket which includes meals. In that case, is a composite supply. The predominant element principal supply is transportation of passenger services. Therefore, this also will come under the composite supply. Point number B. With reference to the GST law, define non-resident taxable person and also analyze the provision relating to filing of returns by non-resident taxable person. Very simple, my dear. Who is a non-resident taxable person? A person basically a foreigner coming to India for temporary purpose to carry out the business. It may be supply of goods, supply of services. Such a person in India mandatorily should get registered under GST law irrespective of the turnover. They are not eligible for composition scheme. Such a NRI, namely non-resident taxable person NRTP, should pay advance tax before the 5 days of the commencement of their business, and they should file the return form GSTR 5 return. Due date of file the return is 13th of the following month on monthly basis. Here a simple recapitulation of it. Look here, GSTR 5 return for non-resident foreign taxable person NRTP, 13th of the day of the following month monthly basis, or otherwise within 7 days after the last day of the period of registration. If registration expires, not required to wait till the end of the next month 13 to file the GSTR 5. GSTR 5 can be filed in the same month, the month in which his registration got expired. Within 7 days from the date of expiry of registration, he can file the GSTR 5. Got the clarity? Is the way in which you have to answer in the examination. Further, coming to question number 3. In that small a, discuss whether the GST would be payable in the following independent cases. So how many cases are they given? Almost all 4 cases are given. Point number 1. Vishnu Temple Charitable Trust registered under section 10 subsection 23 C clause 5 of the Income Tax Act gives on rent a community hall located within the temple premises to public for organizing a Diwali Mela. Rent charge is rupees 9,950. A temple meant for general public, and it is registered under section 10(23) C clause 5 of the Income Tax Act per month, per day basis. Per day basis, they given on rental basis community hall per day less than rupees 10,000 exempted. How much here? Is less than 10,000. Therefore, the given supply is exempt. Further, point number 2. A company secretary makes payment of LLP registration fee of rupees 4,000 on behalf of their client and charges the client his professional fee of rupees 16,000 along with the expenses of rupees 4,000 incurred from the payment of registrar of companies. Simple. It's a pure agent expenditure. So here there are two things are there. One is taxable. How much taxable? His fees 16,000, and also it has exemption. That means not taxable, which is how much? 4,000, which is the supplier incurred acting as a pure agent. So therefore, such expenditure should not be form part of the taxable supply. Further, referring point number 3, a pharmaceutical company supplies free sample to doctor. Free sample, no consideration, no GST, because they are not related parties. It is not going to cover under the Schedule 1 also. A pharmaceutical company supplies free samples to doctor. Nothing has mentioned. In that case, such a free sample, no consideration, also not covered under Schedule 1, therefore not taxable. It is exempt. Further, my dear friends, point number 4. RTY Limited has given on hire 12 trucks to ABV Transporters of Mumbai, a goods transport agency, for transporting the goods in various parts of the country. The hiring charges for the truck are rupees 10,250 per truck per day. Sir, a particular goods carriage vehicle given on hire to a goods transport agency specifically qualify from exemption. Therefore, it is exempt from the payment of the GST. Further, question number 3, in that point number B, reading as follows. SST Limited, a registered person under GST law at Ahmedabad, procure the following goods in the month of October 2023. 1. Inputs used for the manufacture of the final product, GST paid 35,000 rupees. Goods destroyed due to natural calamities, 8,000 rupees GST paid. Food and beverages used in dealers' meat, 12,000 rupees GST paid. Food and beverages purchased for the employees during the office hours, 5,000 rupees GST paid. Goods used for setting up telecommunication tower being immovable property, which is 1,50,000 GST paid. Account paper for photocopying machine used in administrative office, rupees 6,000 GST paid. Goods used for providing the services during the warranty period, 12 rupees GST paid. Compute the amount of input tax credit available with SST Limited for the month of October 2023 by giving the necessary explanation. Assume that all the other conditions necessary for availing input tax credit have been fulfilled. Very good, simple. So here, first one, inputs used for manufacture. Yes, ITC allowed. 30,000 rupees ITC allowed. ITC 35,000 ITC allowed. Goods destroyed, natural calamities, so no cascading, therefore ITC not allowed. This one, no ITC, not allowed. Food and beverages used in dealers' meat, food and beverages block crate, therefore ITC not allowed. Food and beverages used for employees during the office hours, also ITC not allowed because block crate, unless it is obligated for employer to provide to the employee. It is not stated, therefore not allowed ITC. Goods used for setting up telecommunication towers being immovable property, 1,50,000. It is a block crate, therefore ITC not allowed. Account paper for photocopy machine used in the administrative office, it is furtherance of business, ITC allowed. How much? 6,000. Goods used for providing services during the warranty period, these goods add in the value of supply, therefore cascading is there during the warranty period. If you replace the goods on which GST, ITC allowed. Goods used for providing services during the warranty period, ITC allowed, which is rupees 12,000. Therefore, how much ITC allowed? 35,000 rupees followed by 6,000 plus 12,000. 53,000 is the ITC allowed in the given case, my dear friends. Further referring here, question number 4. A. Every person registered under the GST law is required to deduct TDS under Section 51 of the CGST Act. Comment on the validity of the above statement and discuss the relevant provisions of the law. Sir, as you are aware of that, as per Section 51 of the CGST, TDS should be deducted only by DDOs, namely drawing and disbursement officers. Who are they? Government, governmental agencies, public sector undertakings, societies registered under the Society Registration Act but established by the government, local authorities. They only allowed to deduct the TDS, not the others. Is the way we have to present the answer. Further, question number 4, point number B. Write short note with reference to the time of supply under RCM in case of supply of goods, in case of supply of services. Very simple. Here, section 12, subsection 3 of the CGST Act. 3 points to be taken into account. Date of receipt of the goods, date of payment, or the first day that occurs after expiry of 30 days from the date of invoice. Among the whichever is earlier is the time of supply for supply of goods or some apply. When we talk about supply of services, we have section 13, subsection 3 of CGST, which says that reverse charge, date of payment, or the first day that occurs after expiry of 60 days from the date of invoice, whichever is earlier, is the time of supply. In case import of services by an associate enterprise from its read person, in that case date of payment or date of book entry in the books of accounts of the recipient, whichever is earlier, is the time of supply. Got the clarity, my dear friends? Further, my dear sir, question number 5, point number A. Mr. Sachin, a cost and management accountant, being a partner in the GST registered firm, orders a gaming software for his son, Mr. Rajiv, from a company located in USA. He makes the payment for the same from his personal bank account. Examine whether the transaction will be liable to GST. If yes, in whose hands the tax is liable. Also discuss the related legal provision in brief. Sir, it is OIDR nature, readily available in the cloud to get it by making the payment. Online information database access and retrieval services. In that case, supply to unregistered person in India, because Sachin is personal capacity only imported the given supply. In that case, he made from personal account. Therefore, Sachin, as a Sachin, from his personal capacity, he import the services. In that case, my dear friends, it is supplied to unregistered person. In that case, it is forward charge, liable to pay GST by supplier who located from USA. He liable to pay GST. Sir, he's in USA. How can he pay GST? He should have to have a place of business in India. Not having, sir, then he should appoint a representative in India to pay the GST. So the supplier liable to pay GST in the given case, not by the recipient. It is taxable supply. Got the clarity, my dear friends? Further, interesting question. Question number, here point number, sub point B. Question number 5, sub point B. Mr. Kishan, an air travel agent, provided the following details for the quarter ended on March 2024. Basic airfare collected for international booking of tickets 65 lakhs. Basic airfare collected for domestic booking tickets 53 lakhs. Commission received from the airlines on the sale of domestic and international ticket 4,95,000. Year-ending bonus received from airlines 30,000. Compare the GST liability of Mr. Kishan, an air travel agent, for the quarter ended on 31st on March 2024. In the above case, would the GST liability of Mr. Kishan be reduced if he opt for the special provision for payment of the GST as per the rule number 32 sub number 3 of the CGST rules, the applicable rate of GST 18%. It is a tax planning problem. It is drawn from our study material. Paper number 19, study material is there. So here, if you refer first commission, commission includes earning bonus. So total how much here? 4,95,000 plus 30,000. Together is a consideration. How much here got? 5,25,000 on which 18% GST. How much comes on which 18% GST? Here almost coming here 5,25,000 into 18% GST. Amount coming here rupees 94,500. 94,500 is one side. On the other hand side, if you apply the rule number 32, sub number 3, for domestic booking is 5%. For domestic booking, 5% of the supply is a taxable supply. For international booking, 10% of the value of supply is a taxable supply. In that case, here 10% means 6,50,000 for international booking, 6,50,000. Then here 53 lakhs on which 5% domestic booking, 2,65,000. Total amount how much comes here? 6,50,000 plus 2,65,000. Totally 9,15,000. If so, on 9,15,000, 18% GST. On which 18% GST is equal to almost all 1,64,700 GST. So if I go with valuation rules, I have to pay the GST 1,64,700. If I go with the normal payment of the GST on commission basis, liable to pay only 94,500. So the economical one is go with the normal way of payment of GST on commission rather than to choose valuation rule. Is economical. Is the way in which you have to advise to the client the tax planning nature. Further, my dear friends, question number 6. Outline the major scheme announced for exporters under the foreign trade policy which are meant for Indian exporters. Export schemes, my dear. Advance authorization scheme, followed by duty-free import authorization scheme. Thereafter, remission of duties and taxes on exported goods and services, followed by EPCG scheme, export promotion capital goods scheme. Thereafter, we have EOU schemes, EOU units concept. These and all come under the foreign trade policy, which are major the schemes for our exporters to motivate for export. Further, question number here 6B. When you refer this, my dear, special economic zone and export oriented unit are the same thing and there is no difference between them. Comment and discuss the validity of the above scheme. My dear sir, SEZ, special economic zone, entirely different from EOUs. Special economic zone is treated as separate island within the territory of India. Physically may be in India, but technically is outside India. Supply to SEZ unit we called as exports. Supply from SEZ unit we called as imports. Supplying to SEZ unit, the supplier should submit shipping bill. The person who receiving the goods or services, especially goods from SEZ unit, the recipient should submit the bill of entry. Whereas EO units, supply by EO units into domestic tariff area cannot be called as import. We supplying the goods or services to EO units, we won't call export. It may be deemed exports. If I supply the goods to EOU unit, it's a deemed export. It is not going to qualify exports status. The supplier who supplies the goods to EOU not required to submit shipping bill, unlike of SEZ units. A person who procured the goods from EO unit not required to submit the bill of entry, unlike the SEZ unit. So there are difference. For getting a license to have a unit in SEZ, we should get the license from the government. Whereas for EO unit, I myself can declare any place as EO unit by showing the performance of exports. Is the major differences. Both are not one and same. Further, my dear friends, now referring to you, question number 7, point A. Discuss about the persons who have been conferred exemption from e-invoicing requirement as per the GST law. Who are they, my dear friends? 1. Government agencies, government departments, local authorities not required to issue e-invoice. Special economic zone unit not required to issue invoice. I am talking about special economic zone unit, but not the special economic zone developers. For special economic zone developers, e-invoice mandatory if the turnover in the previous year exceeds 5 crores. But it is not mandatory for special economic zone units. Point number 4. Insurance companies, banking companies, NBFCs, which includes financial institutions, or passenger transportation service providers, goods transport agencies, GTS service providers, multiplex screen movies exhibiting by cinema theaters not required to issue e-invoice. Question number 7B. Examine the duty-free importable item under the advance authorization scheme. Write a brief note on eligibility of advance authorization. My dear friends, it is one of the export incentive for the exporters given in the foreign trade policy 2023. A new foreign trade policy brought advance authorization. It is also there in the earlier also. It is one of the important export incentive scheme. It is basically pre-export incentive. That means when you import inputs, not required to pay basic custom duty, not required to pay the additional custom duty, namely IGST, not required to pay any other custom duties like anti-dumping duty, like the safeguard duty, protective duty, countervailing duty, subsidy articles. These are all free from duty when you import the raw material, which is you declared in self-declaration before importation. I am going to import, these are the goods A, B, C, D as my raw material, as my inputs, and ensure that if you import such goods, then manufacture in India, make in India, then that raw material should be contained in the finished goods, and the finished goods it should be export. After export, should not ask any duty drawback, because at the time of import itself, you got the benefit of non-payment of import duty is pre-export benefit you obtained. Now, such an advance authorization scheme is applicable, my dear friends, to all type of manufacturers, merchant exporters, supplies to special economic zones. They qualify for this particular duty-free. That means that is the duty-free imports, namely advance authorization at the time of import, not liable to pay import duties, provided you have to satisfy conditions. What conditions? When you going to import, you have to have a SIAN, standard input output norm, or self-declaration of inputs. Then thereafter you should meet actual user condition. What do you mean by actual user condition? The imports should be contained in the finished goods for export. If any imports you are exporting as such, permitted only 10% of the CF value of import can be exported as such. And you have to import the goods from the date of authorization, namely permission given to you to import without payment of import duty within 12 months from the date of authorization you have to import. Furthermore, 12 months revalidation can be permitted, means time can be extended to import. For a maximum period of 24 months, you have to import goods. Then that goods after you manufacture, export within 90 days from the date of clearance of imported goods. These are the requirement you have to satisfy. Then you are free from import duty, from all type of duties. When you export within the time period, then very good. Within 90 days from the date of imported goods cleared, you have to manufacture and export. That 90 days time period cannot be extended. These are the features under the duty free import, where advance authorization as a pre-export benefit. Moreover, you should not forget, last but not the least, when you export the goods, there must be a value addition, minimum 15% on your import value of CF value. When you export FOB value, should be more than 15% of the value of CF value of import. Value addition 15%. And you are having annual advance authorization scheme if you are having the previous track records of exports. For the past 3 years you are continuously exporting. In that case, in the previous year, how much you exported are deemed export on the total 300% or 1 crore rupee, whichever is higher. Up to that, in the current financial year, if you obtain annual advance authorization up to that value of import goods, you can import without payment of import duty. These are all the features available in the advance authorization. You have to write in briefly, in point by point in the examination. Further referring to you, my dear friends, question number 8. In that small a final order has been passed by the Commissioner of Central Tax having revisionary authority in respect of Kailash Traders, a registered supplier in the state of Tamil Nadu on 12th October 2023. The amount of IGST, penal interest and penalty and interest confirmed by the Commissioner and accepted by the assessee are as under. Nature of demand, tax, penalty, interest. As per the order passed, rupees in crores, 600 crores, 300 crores, 30 crores respectively. Accepted by the assessee in crores, 400 crores, 150 crores, 15 crores respectively. The required amount of pre-deposit was made by Kailash Traders on 5th November 2023. A valid appeal was filed before the GSTAT, Goods and Services Appellate Tribunal. The tribunal passed an order fully in favor of Kailash Traders on 12th February 2024. On 10th March 2024, Kailash Traders submitted an application for refund of pre-deposit along with the applicable interest. The said application was acknowledged by the department on the same day and the pre-deposit was refunded on 14th May 2024 along with interest. Based on the aforesaid facts given in the case study, compute the amount of pre-deposit to be made for filing of appeal and the interest to be granted by the GST department. Very simple, sir. Is appeal to a tribunal. So pre-deposit should be 20% of tax disputed. That means out of 600 crores of tax, accepted 400 crores. Therefore, disputed tax here is difference 200 crore is a dispute value on which 20%. How much comes? 40 crore. 40 crores or 100 crores, maximum amount, whichever is less, 40 crores. This 40 crores pre-deposit, how much they made now here means pre-deposit is equal to 40 crores plus accepted already to pay, namely 400 crores plus 150 crores plus 15 crores, which is equal to how much? 565 crore. As a result, total 605 crore is our pre-deposit. 605 crores is our pre-deposit, my dear friends, in the given case. Then interest computation. Here section 115 of CGST apply. From the day 1 of the pre-deposit till the date of refund, you have to pay interest at the rate of 6% per annum, because government making the payment of interest, they won't pay 18% and all, therefore 60% per annum in the given case. Last date of granting the refund, they won't give the interest. So number of days computing now. Number of days computing when the deposit made on 5th November. So in the month of November 2023, from 5th November to 30th November, number of days here comes into picture, 26 days. Plus November, thereafter December, 31 days. Thereafter January 24, 31 days. Feb 24, leap year, 29 days. March, 31 days. April, 30 days. Thereafter May. May, when they give the refund here, 14th May. Therefore, up to 13th May only they will give the interest. The last date of payment of refund on 14th May, they won't pay any interest. Therefore, total number of days. Now how much comes here? Quickly tell me. 26 plus 31 plus 31. Thereafter 29 days, 31 days plus 30 plus 13 is equal to 191 days delay happen. So interest is equal to 605 crore pre-deposit refunding at the rate of 6% per annum, isn't it? For 191 days divided by 366 because leap year. So the interest amount is here equal to how much comes here? Is equal to 18 crores 94 lakhs 34,426 is the amount of interest. 18 crores 94 lakh 34,426 in the given case. Got the clarity, my dear friends? Further referring to you, question number 8, point number B. Sanvita and Company, a registered person in the state of Maharashtra under the regular scheme, purchased on 12th March 2022 goods for 23,42,400 inclusive of GST from Vapor Limited, a registered supplier in Gujarat under the normal provisions. Sanvita and Company duly claimed ITC in respect of this purchase of taxable goods. The payment was made by the buyer to the seller within 20 days by electronic fund transfer. The goods were transported through truck. All the documents proving the movement of the goods, original tax invoice, e-invoice, etc. are available with the Sanvita and Company. After nearly 2 years, in March 2024, the GST department sought to reverse the input credit solely on the ground that the seller had not remitted the GST to the government. No attempt has been made by the department to recover the amount from the seller. In the show cause notice, non-payment of the GST to the government has been cited as the sole reason. Savita and Company oppose this move of the department. Is their contention tenable in law? My dear friends, we have a section 16 subsection 2 class C of the CGST Act. The supplier should make the tax payment to the department for availing the input tax credit by the recipient. Now we have here a rule also. Rule number 37 capital A, which says that here, Mr. Supplier, at least you have to make the payment by 30th September of the succeeding financial year. If you not made the payment to department, hey Mr. Recipient, you should reverse the credit by 30th November of the succeeding financial year. In the given case, Savita and company should reverse the credit because up to the March 2024, for the transaction took place in the month of when? In the month of March month, that is 12th March 2022. That means 21-22 financial year, for which the supplier should make the payment by 30th September 2022. If not, by 30th November 2022, the Savita and company should reverse the credit. But they have not reversed it till the notice issued March 2024. Therefore, the contention of the Savita and company to oppose the move of the department is not tenable in the law. Savita and company should reverse the credit. And from the date of utilization of the credit, Savita and company liable to pay interest on such credit utilized at the rate of 24% per annum. So, department sending the notice to reverse the credit in the given case is justifiable, right? With this, the questions asked in the exam of December 2024 fully, thoroughly we completed. All the best, my dear friends. Thanks to all of you. I bless you to qualify in this December 2024 examination. Thanks to all of you.